Looking good, Billy Ray. Feeling good, Lewis. How's your investment in Penelope Pantaloons? Heard some chatter that the company might not be doing so well. Who cares? It's accounted for at cost since it doesn't have a readily determinable fair value. Cost? There is no more cost under ASC 321. What are you talking about, Lewis?
What Lewis is talking about is ASC 321, which is the applicable accounting guidance for all investments in equity securities and other ownership interests. Let's take a look at the big-ticket changes to the accounting for equity securities and other ownership interests included within ASC 321. Remember the trading and available for sale categories for equity securities? They're gone. What about the headache of determining whether impairment of such investments was other than temporary? That's gone too. Why? Because ASC 321 requires equity investments within its scope to be measured at fair value, with changes in fair value recognized in net income, making these categories and other than temporary impairment assessments moot.
But what if the investment does not have a readily determinable fair value? Wouldn't measuring it at fair value be difficult?
It would, Billy Ray, which is why ASC 321 provides a measurement alternative if an equity investment, such as your investment in Penelope Pantaloons, does not have a readily determinable fair value.
You'd better check out this new eLearning module from Gap Dynamics to get up to speed. I did.
In this module, you'll learn about the scope of ASC 321, which is important to determine whether this topic even applies to the investment. If ASC 321 does not apply, then you need to look for accounting guidance in other topics within the codification. We'll also dive into the subsequent measurement of investments in equity securities, which depends on whether the investment has a readily determinable fair value, qualifies for and the entity elects to use NAV as a practical expedient to fair value, and if the measurement alternative is elected. If you own an investment with a readily determinable fair value, such as shares of Microsoft or IBM, the accounting is easy. Such investments are reported on the balance sheet at fair value, with changes in fair value reported in earnings. However, if the investment does not have a readily determinable fair value, a measurement alternative might be available. It's this so-called measurement alternative which will be so different for many entities applying ASC 321, so we'll spend some time in this area. You'll also have ample opportunities throughout the module to test the knowledge you've learned. Ready to go? Let's get started so you can get back to the more important things in life.